So over the past decade, the banking industry has faced its toughest test with trillions of dollars of unrealized losses plaguing the economy and setting many banks on a collision course with their own balance sheets. Okay, so my name is Rock Daniels. I am the Bluegrass Realtor. Take a second, hit that subscribe button so you and I can stay connected. All right, so in recent weeks, there's been a daisy chain of American banks that have fallen apart, with chaos even spreading across the pond to Switzerland, taking down Credit Suisse, which is one of the oldest and biggest banks in the entire world. So the media and many talking heads out there, they're pushing a narrative that the government came to the rescue and there was nothing wrong with the financial system, and that this is just some kind of like monetary blip. But the truth is very different. And a brand new paper from a social science research network reveals that 186 more American banks are on the brink of failure, suffering from problems identical to the ones that brought down some of these previous banks. And the number is not even close to the potential number of bank runs. Now, for those lucky enough to read the news daily, like myself and like you, it's clear that over the past couple weeks, we've seen World Bank failures, with banks falling apart all over the place, mostly concentrated in the US and especially California. Now, the biggest to go recently was that Silicon Valley Bank that you remember. And while it has now emerged that they were basically some kind of criminal organization, then they refused to follow the standards of banking regulations. And they were very obsessed with making sure that they were diverse and had certain people of certain skin colors on their board rather than the actual financial stability of their bank. You know, this has been a problem for the rest of the industry as well. Now, at the end of the day, the reason Silicon Valley Bank fell is that they lost billions of dollars as bond prices fell. And every single American bank out there has also lots and lots of money on the bonds that they own. You know, Signature Bank, which collapsed a few days after Silicon Valley Bank, lost billions as well, as did First Republic Bank, which has seen a slow but steady fall over the past couple weeks. Now, asset prices have fallen and banks own trillions of dollars worth of assets, so banks have lost lots of money over the last couple weeks. Now, that might seem like just some kind of oversimplification, but to be fair, you know what? It is. But it's also all you really need to know about what's happening so far. The breaking news behind this video that I'm making is that far more banks have lost far more capital than we had earlier realized, and we only know this today thanks to an academic paper released just a few days ago that exposes just how bad this situation is. Now, this paper, called Monetary Tightening and the U.S. Bank Fragility in 2023, Mark-to-Market Losses and Underinsured Depositor Runs, reveals that the U.S. banks market value the assets of $2 trillion lower than the suggested by their book value of assets. Now, accounting for loan portfolios and health to maturity. Now, this sneaky accounting rule is designed to help banks make billions of dollars, but the economists who authored the paper have done their homework and worked out that as Silicon Valley Bank sold their assets, the average value of those assets around the world fell by an average of 0.4%. Now, this paper then outlines how many American banks would collapse under a few different circumstances. Now, the first circumstance is a little bit unlikely, and it's involving banks being forced to liquidate 100% of their assets to pay out every single depositor. The most extreme bank run imaginable. Now, under these circumstances, 2,315 American banks would be insolvent and incapable of giving out money they owe. Now, as I said, 100% of all assets being liquidated and sold is incredibly unlikely, so we really shouldn't worry about that happening, especially since the first $250,000 in every account is guaranteed by the government through the FDIC. So a bank run occurring on assets underneath that mark really is very unlikely. But what would happen if all uninsured by FDIC deposits are withdrawn? That would result in 1,619 American banks becoming insolvent. And this is a much more foreseeable future. Now, guys, my name is Rock Daniels. I am the Bluegrass Realtor for all your Central Kentucky real estate needs. I am a 20-year realtor, real estate investor, and I'm a licensed general contractor. Basically, I know pretty much everything there is about houses. So give me a call, shoot me a text, fire off an email. Let's get started making your real estate dreams come true. All right, have a great day. Hit that subscribe button.